Good morning, good morning, good morning. It's me, Kenny Polcari, your host of the party, and here's today's morning market video commentary. Oh my God, after yesterday, did you see what happened yesterday to stocks not only in the US, but stocks really around the world? And what caused that? I mean, a lot of things caused it, right? There wasn't just one thing that caused it. But we have to ask, was the Evergrande crisis just a single moment in time? Stocks around the world this morning are in rally mode after investors are discounting the panic created by that Evergrande default yesterday. Today also starts the FOMC meeting, right? Along with all kinds of speculation. The question is, will the Fed remain in a dovish stance? And what are we having for dinner tonight? We're going to have the Italian wedding soup because it's always good when you're feeling anxious. Look. Global stocks cracked on Monday. U.S. stocks cracked on Monday. The Dow lost more than 900 points by 3:30 yesterday afternoon before closing only down 614 points in a dramatic end-of-the-day rally. The S&P lost 75 points. The Nasdaq gave back 330. The Russell lost 55. And the transports gave up 171 points. It was an interesting day, to be sure. Lots of chatter around the street about what's next. How could this happen? Should I bail? Should I buy more? Oh my God, what do I do? All the questions that haunt you when the market goes into what felt like a free fall. Everybody trying to explain it away, all while there have been so many people screaming about a pullback for months now, myself included. Which is why when it happens, it's always so interesting, because what really happened? Nothing changed in terms of the macro data or the Fed plan or the conversation going on in D.C. There was no announcement about a taper or rising interest rates, but there was speculation, but not enough to cause any sell-off like we witnessed yesterday at all, or at least not yet there wasn't. There may be, but that wasn't yesterday's reason. There was this news out of China, right? The biggest real estate developer in the country about to go belly up, and what that would mean for the Chinese economy and the banking system, and then by default, what it means for the global economy and the global banking system. And that was enough just to ignite the fire. The market was looking for a catalyst. Word that some of the biggest U.S. banks had exposure only caused even more angst for investors in this country. Asian markets, the ones that were open, fell under the pressure on Sunday night. European markets then followed suit, falling more than 2% in the early trading, but actually ending the day off their lows, which should have been a little bit of a signal to the U.S. investors. U.S. stocks took a real beating for most of the day. They opened lower, and then they fell further and further as the morning turned to afternoon. And then rumors of this white knight appearing in China said patient U.S. buyers scrambling at about 3 o'clock. Igniting a rally that took the markets from the depths of despair to just another day and a classic buy the dip rally. At the worst of it, the S&P did see a move taking it down just a bit more than 5% from the all-time high, a move we haven't seen in quite a while, and almost a move that I've been calling for, right? For months now I've been calling for it. I'd rather have seen a 7 to 10% move off the high, but for now, I'll take the 5.5%. I hope none of this comes as a surprise to anybody, because if you've been listening to the conversation, the correction was well overdue. No matter what ignited the move, and by the way, it still isn't even a correction yet, right? We've only gone 5% off the highs of the S&P in early September, so that's well within the normal trading range. A correction means the average has to move more than 10% off the highs, which doesn't mean that some of your stocks may not be in correction mode. They most likely could be. But broadly speaking, the overall market is still in a normal trading range. It is not in correction mode. I mean, that's assuming there's anything normal these days, right? I mean, the way we're talking about it's just unbelievable. The Fed and all the money, blah, blah. There's nothing really normal. But as the day wore on, stocks did get weaker versus stronger, which isn't necessarily a good thing, because stocks that close on the lows usually set themselves up for a further flush the next day, which is not what happened yesterday. Stocks rallied off the lows, and guess what? This morning, U.S. futures are where? They are up. Now look, it's not just, like I said, it's not just this one thing that caused it. It was a negative day. It was led by the Evergrande news, which then brought up all the other news that could be perceived as negative. Think the Fed, the ECB, the Bank of England, etc. Think tax and spend policies. Think about a slowing global data points. Think about a slowing global economy. And think about the looming debt ceiling debate that's coming. Notice no one even mentioned Delta or COVID yesterday. Toss it all in, and then you want to know why markets were having a tantrum? They just needed a reason, and that's what they got. And while you say the Evergrande thing doesn't mean anything to us, think again. First, it creates a negative tone over Asia, and then you start to consider the exposure that so many European and U.S. banks may have to Evergrande. And then you may reconsider that position. So, for instance, Goldman Sachs lost 5% of its value yesterday by 3 p.m., taking 125 points out of the Dow and taking that stock down over 11% from the late August highs. So, yes, if you own Goldman, guess what? You're in correction mode. It's now broken through its short-term trend line, its intermediate-term trend line, and it looked like it wanted to even test its long-term trend line. And why? Because it was revealed in all this drama yesterday that Goldman, along with a handful of other U.S. investment banks, do have exposure to Evergrande. Just what that is still unknown right now to you and me. But if you're Goldman or JP Morgan or Morgan Stanley or Citibank, you know exactly what your exposure is, and you are working very hard to mitigate any fallout. And honestly, they've probably written it down, right? They've written this risk off, considering the issue's been brewing for months. I mean, just look at the chart, and that reveals the building weakness. Evergrande has lost 80%, 87% of its value since January of 2021. The chart goes like this. And now the good news is, with the markets and futures high this morning, guess what? You can expect Goldman Sachs is going to rally back and probably go positive. So unbelievable. Now, many of the big names on the street came out in force yesterday to try to calm the markets, ensuring investors this is not a Lehman Brothers moment at all. Something which I also said yesterday morning in my note. The message sent to global markets is simple. Yes, Evergrande may default, but it's not going to be a disaster that the markets were suggesting, because in their view, the strategist's view, the Chinese government is going to step in to prevent the latest crisis from destabilizing their economy, and stocks around the world are, as I said, are in rally mode again. Whether it's Chinese government, they're getting help from other financial firms in China, but it's not going to destabilize. The 10-year Treasury ended the day at 1.3%, but this morning it's yielding 1.33% as calm is restored. Gold rallied 12 yesterday, it's up another 4 today. Oil, which lost 2% to end the day yesterday at $70.40 a barrel, is up 1.5% this morning at $71.31. So it's all good. The moves yesterday saw energy lose 4.2%, by far the biggest losing sector. Financials, consumer discretionary, basic materials all lost more than 2%. Industrials, tech, consumer staples, and healthcare gave up about 1.5%. The growth trade lost 2.5%. The value trade lost 2%. All this while the sectors are now, today, going to provide an opportunity for new investment dollars because they shook the branches a little bit. And so now it's this buy the dip mentality. Dow futures this morning are up nicely. Like I said, Dow's up 321 points. S&P's up 36. And Nasdaq's ahead by 120. The Russell's up 28. And while yesterday's action did feel uncomfortable, the fact is it was long overdue and should not have been a surprise at all. In fact, the sharp correction is healthy for the overall market, and this pullback, which is partly seasonal, partly Fed-related, and now partly Evergrande-related, should not necessarily be completely discounted. It had to happen. Eco data today includes housing starts expectations of plus 1%, building permits down nearly 2%. Today also begins the September FOMC meeting, right? Federal Open Market Committee. So we await for the press conference tomorrow at 2 p.m. to see what the Fed is going to do about tapering in rates, which is nothing. My guess is that the Fed will use the recent weak economic data, which I think is baloney, along with the most recent China issue to commit to discussing the start of U.S. tapering, but will not offer a definitive clarification on a date. While we all thought it was a November-December event, it now appears to be a January-February event, and that's not even definite yet either, right? So we're going to see how that goes. But it does buy them more time to consider upcoming macro data points in October and in November. So maybe the conversation about starting it will be in November, but it's not going to start until 2022. European markets are all up across the board, paying little attention to the China debacle or the Fed meeting. Basic resources and energy stocks are leading the pack higher, just as they led the pack lower yesterday. There's no economic data today to speak of in Europe, and so investors are busy just going on a shopping spree. The Bank of England is set to announce their rate decision on Thursday, and no change is expected. Bitcoin and Ethereum, though, which came under pressure yesterday like everything else, are not rallying yet today. Bitcoin's trading at 43,000, Ethereum's trading just over 3,000. So they're struggling a little bit, not participating in the excitement this morning. The S&P ended the day at 4357 after testing nearly 4,300, breaking down and through both its 50-day moving average and its intermediate 100-day moving average before the rally that took it back above that intermediate trend line. This morning's rally looks like the S&P is going to open at 4380-ish. What's going to be interesting is what happens when it gets back to 4436, which is the short-term moving average trend line. Will it serve as resistance, or will the buyers just blast up and through and take it back to take the S&P back to its yearly highs? We're still in a seasonally weak period, and with the Fed announcements looming, markets remain on edge. In any event, my sense is that the market now expects nothing definitive, which means the Fed will remain dovish, and that will be supportive of U.S. markets. Now, remember, you can text the word invest at 21,000 to get my digital business card. Feel free to download it right to your phone. It's got my email, my phone number on it. You can feel free to text me, send me an email, call me. I'm always happy to discuss markets, concerns, planning, ideas, thoughts, education, whatever it is. I'm always happy to do it. You know, you can follow me on Twitter at Kenny Polcari, on Instagram at KennyP1961, and now on TikTok at Kenny Polcari. Just started that, so it's new. Tell me what you think. And if you're watching this, you know you could always find my daily video on my YouTube channel, which is Kenny Polcari Media. So what are we having for dinner tonight when you feel anxious? It's such a great dish. It's Italian wedding soup, right? It's hearty, it's delicious, it calms your stomach. And it's a great soup to make not only for any occasion, but we always have it as one of the dishes to start our Thanksgiving meal. So you can start to put this on your list about what you're cooking for Thanksgiving, right? It's full of veggies and tiny little veal meatballs, and it is a family favorite. So for this, for the meatballs, you need 1 pound of ground veal, fresh breadcrumbs, minced garlic, like 2 cloves, chopped parsley, fresh pecorino romano cheese, fresh Parmesan cheese, milk, an extra large egg, and that you've lightly beaten, and then you need salt and pepper. For the soup, you need to make your chicken soup to start. So however you make it, just make sure you use plenty of carrots, celery, and onions, right? You need 1 cup of tubettini, which is that small pasta, fresh baby spinach, washed and trimmed, right? You want to preheat the oven to 350 degrees. Get it ready to make the meatballs. Now, for the meatballs, place the ground veal, the breadcrumbs, the garlic, the parsley, the pecorino, and Parmesan cheese, some milk, the egg, and salt and pepper in a bowl. Combine it like you're going to make meatballs. Just mix it up nice and nice. Take a teaspoon now and drop like 1-inch size. They're really small. They're just bite-sized meatballs onto the tray on parchment paper. You should end up with 35 to 40 meatballs. They don't have to be perfectly round. You want to bake them for 20 or 30 minutes. You want them to get brown. You want them to be cooked through and nicely brown. Once the soup is done, you want to add the pasta, the 1 cup of tubettini to the pasta. Let the pasta cook in the soup for about 6 minutes. Once that's done, you want to take the meatballs, you want to add the meatballs to the soup, and you want to add the fresh spinach, right? You don't cook it, it's just raw, fresh spinach. Put it right in the soup. Let it continue cooking for about another 2 minutes. That way the pasta will be done. It'll be perfect. You want to serve it immediately. You want to take this now and serve it in warm bowls. So you want to get the soup, some of the pasta, the veal meatballs, and you want to have extra cheese on your table for your guests. And what always works nice with this is, you're not going to be surprised, is garlic bread, right? I love garlic bread, but garlic bread with this dish is great because you can actually use the garlic bread. You can dip it in the soup. You can eat it with the meatballs. It's just, I don't know, maybe it's an Italian thing. Maybe it's just a kid thing. Maybe it's just a memory from when I was a kid. But having garlic bread with this dish is always a good way to go. In any event, the day is getting started. It looks like the market's going to rally today. Take back all the nervousness from yesterday. Seems to have dissipated, at least for now. But we do have the Fed ahead of us, and we still have the end of September into October, which is seasonally weak. So All I'm saying is stay awake. This is not the time to go to sleep. In any event, until I see you tomorrow, take good care.